Of the 20 executives at the White House today, only 2 of them represent the financial services industry. That's American Express's Ken Chenault and UBS's Robert Wolf. Why aren't there more banking CEOs at the conference? Well, Rob Nichols is president of the Financial Services Roundtable, which represents the country's largest financial services company. He joins us here in studio. So I know why you want bankers at the table. I mean, that's your constituency there. But are you looking at this list and saying those aren't the types of jobs that we need based on the CEOs who are asked to come?
No, I think the White House probably wanted to have a broad cross-section of individuals there. And obviously, many of the bank CEOs do spend some time in Washington, probably more and more time in recent days. So I'd imagine they just wanted a broad cross-section of a lot of different industry sectors, and about 10% of the folks in the meeting today are from the financial services sector.
So what is it, though, specifically that they can come and legitimately ask for? We hear a lot about, get someone in the administration from the business community. We hear a lot about taxes. Putting those 2 things aside,
sure.
What can they ask for?
I think there's 2 tonal things that the president's going to hear today, and then we'll talk about the issues. From a tonal standpoint, I mean, the first thing that these CEOs are going to convey to the president is, Mr. President, we have a shared goal. We want to get this country back on a path of economic growth. It's a win for everyone. It's a win for the business community and corporate America, for our investors and our shareholders. It's a win for the government, because as the economic growth strengthens, we'll have more tax revenues, more tax receipts. That's important. And most importantly, however, if we get back on a path of economic growth, it's important for the millions of Americans who are out of work. That is the most important constituency in terms of getting our nation back on a growth path. Secondly, I think the other thing that the president's going to hear today from this broad cross-section of CEOs is that we want to have a thoughtful, sustained, two-way dialogue on these key pieces of economic policy. We're not interested in photo ops. And in fact, I was heartened to see Valerie Jarrett's comment.
She's one this isn't a photo op.
She is one of the president's top advisors, and I saw her, I think it was in the New York Times today, said this isn't a photo op. This is about having a candid, thoughtful, two-way exchange of views. That's another thing that I think is critically important, that we have both sides listening to each other.
So apart from the therapy part of it,
sure.
Give me the substance.
Sure. I think they're going to talk about a lot of things. They're there for 4 or 5 or 6 hours, but there's probably 4 things that I think would be critically important to get us back on this path of economic growth, restore some certainty, and allow business leaders to have some predictability and ease of planning. In no hierarchy here, Margaret. Number 1, we need to get back and talk about trade. We haven't talked about global economic engagement that much in the last 2 years.
That wasn't enough.
That's critically important. Well, listen, the president deserves praise, for the FTA on South Korea. That's great. Congress needs to pass that. We got the Panama and Colombia ones as well. We should need to take care of those. Number 2, there'll obviously be a conversation about taxes. What will the future corporate tax outlook be like? That's another critical issue, of course. Obviously, we want to look to see where we are vis-a-vis the global landscape on taxes. I mean, that's an important issue, right? Third, our debt deficit picture, of course. We're on an unsustainable course, and I imagine that's a third thing that they're going to talk about today. That is a looming crisis. That is something that
and then that gets cyclical. That brings you circuitously back to the tax conversation. But specifically, beyond corporate taxes, this issue of repatriation seems to be getting a lot of buzz of late. John Chambers from Cisco, one of the men in the meeting, has been out there pounding the table saying, help me bring $30 billion of cash back to the United States. Is he going to get that?
I hope so. I think that's sensible public policy to be able to do that.
President Clinton spoke about this the other day as well.
He did indeed. So we'll see what happens. I'm dying to see the outcome of this meeting. The last piece I think that's going to be discussed today is the issue of regulation. Obviously, just speaking from a financial sector standpoint, there are hundreds of regulations under the Dodd-Frank bill that the regulators will be implementing going forward. All of these are critically important. We want to do so in a way, of course, that provides stability in our financial system and make sure we don't see, we look for looming crisis, but at the same time we don't stifle the availability of credit.
What's the part of that worries you most? What's the part of Dodd-Frank that's
I would say the piece that we're paying the most attention to is that of the new capital requirements. This is critically important. Not only in Basel do we have an international dialogue about strengthening the global capital requirements, the amount of money banks should hold. That's important. We're supportive of that. At the same time, here in the United States, there's going to be an additional capital requirement for the Tier 1 systemically important institutions. We understand the purpose behind that. We just want to make sure that these capital requirements are not ratcheted up too high too fast, which could impact lending, credit availability, which ultimately leads, of course, Margaret, as you know, towards economic growth, capital formation, job creation, which again, going back to the shared goal that the financial sector has with the president, is let's get America back to work.